Hey traders, welcome back to AFTechTrades. Today, we are diving into one of the most effective trading strategies that every trader should know, the breakout strategy. Whether you're trading Forex, stocks, or crypto, breakouts can provide big opportunities to catch strong market moves early. In this video, I'm going to walk you through what a breakout is, how to identify key levels, and, most importantly, how to trade breakouts for consistent profits. So stick around, take notes, and by the end, you'll have the tools you need to start applying this strategy like a pro. Also, before we begin, make sure to subscribe to AFTechTrades, hit that like button, and don't forget to join my free Telegram community where I drop exclusive signals and insights. Link in the description below. Alright, let's start with the basics. What exactly is a breakout? Simply put, a breakout occurs when the price breaks through a significant support or resistance level. These levels are key areas where the price has struggled to move beyond in the past. Breakouts signal a potential shift in market sentiment. It could be the start of a new trend or a continuation of the existing one. There are two types of breakouts we're focusing on today. Bullish breakouts, when the price breaks above resistance, signaling potential upward momentum. Bearish breakouts, when the price breaks below support, signaling potential downward movement. But here's the catch, not every breakout leads to a big move. Some breakouts can be false or fake outs. I'll show you how to avoid those in a bit. Before you trade breakouts, you need to be able to identify key levels on your chart. These are the support and resistance zones where the price tends to bounce off or reverse. Support, a level where the price tends to stop falling and may reverse upward. Think of it like a floor. Resistance, a level where the price tends to stop rising and may reverse downward. Think of it like a ceiling. To identify these levels, you can look at past highs and lows on your chart. You can also use tools like trend lines, moving averages, or even Fibonacci retracements to help spot these key zones. Once you've identified strong support or resistance, you're halfway there. When the price approaches these levels, it's time to start watching for potential breakouts. Now that we've covered the basics of breakouts and how to find key levels, let's talk about the strategy, how to trade a breakout. There are a few simple steps you need to follow. Wait for a clear break. You need the price to close above resistance for bullish breakouts or below support for bearish breakouts. It's important to wait for confirmation before jumping in. You can wait for the candle to close beyond the level to reduce the risk of a false breakout. Volume confirmation, look for an increase in volume. Volume spikes can indicate that there's real momentum behind the breakout. If the volume is low, the breakout may lack strength and could reverse. Enter the trade. Once you've confirmed the breakout, it's time to enter the trade. You can place your buy order above the resistance level or a sell order below the support level. Set stop loss and take profit. Risk management is critical. Set your stop loss just below the breakout point for bullish breakouts or above it for bearish breakouts to protect yourself from false breakouts. For take profit, you can aim for the next key support or resistance level. Now, let's talk about fake outs, the trader's worst enemy when it comes to breakouts. A fake out happens when the price appears to break out but quickly reverses back into the range, catching traders off guard. To avoid getting trapped by fake outs, be patient, don't jump in as soon as the price touches the breakout level. Wait for the candle to close beyond that level. Use volume as confirmation. As I mentioned earlier, low volume can indicate a weak breakout, so always check for a volume spike. Look for retests. Sometimes, after a breakout, the price comes back to retest the breakout level before continuing in the breakout direction. This retest can be a great entry point with reduced risk. Let's look at a few real-life examples of breakouts in action. Example 1, Euro to US dollar breakout. In this example, we'll see how the price broke through resistance, retested the level, and then moved sharply upward, giving us a perfect entry point. Example 2, Gold XAU/USD breakout. Here's another breakout, this time in the gold market. Notice how the volume spiked just as the price broke through the resistance level, confirming that the move had strength behind it. Example 3, Crypto Breakout on BTC/USDT. In this crypto example, we'll see how a breakout led to a quick profit, but only because we entered after a clear volume spike and waited for confirmation. The key takeaway from these examples is that you need to wait for the right conditions before entering a trade. Patience is everything when trading breakouts. To enhance your breakout strategy, there are a few indicators you can add to your chart. Moving averages, use them to identify trends and potential breakout points. For example, when the price crosses above a moving average, it could indicate a bullish breakout. Bollinger Bands, these are great for spotting breakouts, especially when the price moves outside of the bands. RSI, Relative Strength Index, this can help confirm breakouts by showing whether the market is overbought or oversold. These indicators can be used to confirm your breakout trades and improve your accuracy. So, there you have it, the complete guide to mastering the breakout trading strategy. To recap, identify key support and resistance levels. Wait for a confirmed breakout with volume. Use proper risk management with stop loss and take profit. Be cautious of fakeouts and wait for retest when possible. If you found this video helpful, please hit that like button and don't forget to subscribe to AFTechTrades for more strategies, tips, and live trade analysis. And if you want to get even more out of your trading, make sure to join our Telegram channel where I share free trading signals and exclusive content. The link is in the description below. Thanks for watching, and I'll see you in the next video.